Hi, everyone. I hope you can hear me okay in all the rooms. Just to let you know, that's S'mores. So say hi to S'mores and little heater for S'mores because she gets cold. So just to let you know, what we've been doing is we're trying to look at this. So the first thing we're trying to do, and let me just tell you right now, because this has been a huge, not a point of contention, but a huge hassle for everybody on Simpler, is if it's green, it's Think or Swim. If it's blue, it's Schwab. Now, the reason I'm bringing this up is when I show a share link, it won't share with Schwab. So even if it's on Think or Swim, it just won't. Now, you might say, well, why the hell aren't you just using Schwab? And the reason is because I have like 100 scans and 100 different chart things. But if you're new in here, I'll just show you something you can do. This doesn't have any of my proprietary stuff, just so you know. So all I'm doing in here is, let's say I share this grid. And like I said, this will not work on Thinkers on Schwab. But I just want to show you on how I'm doing this. So you do this link, and then you go to Notepad on your computer. I mean, this was Brian's idea in the options room yesterday. So what you do is you go to Notepad and paste it in, and you can save it however you want to save it. And it seems like a couple of days from now, you can then go into Schwab and take that Thinkorswim link and it'll kick in, just not today. So just to let you know, you copy and paste it in there. I'm not saying that particular chart, but then you just do that. So just want to let you know on one way to do it. So that's one thing. So let me see one other thing. Give me a second. And that's what I'm doing right now, just so you know. So doing that. So what else are we doing in the market? Well, number one, we're seeing this. And we're seeing this of here. And I don't know, Kenneth, what you're talking about in there, but this is what I want to show you. So all we're doing in here is we're taking the bond market, and the bond market has brought up the stock market, no doubt about it. Brought up the stock market. You had some economic reports that hit the bonds, but boy, were they too far from here. Too far from here. Just keep that in mind. Too far from there. And this is what I do usually. I do these things called box charts on Sunday night, Tuesday night, and Thursday night. I didn't do them yesterday because it was just so ridiculous of the divergences. When something is extremely overdone, but you don't have reasons yet to short it, but you don't want to buy it when it's this far from the 50, it gets really important. So just keep that in mind, that it's really hard to chase anything. And over here, by the way, has to do with a rollover gap. So the ES has some premium, a lot of premium. So I just use SPX. But I want to show you some of the things I'm looking at. And keep in mind, the bond market in the ES, somebody asked me, what's my favorite correlations over 40 years? Every day it changes. The bond market doesn't matter yet, but you're starting to see that divergence, and I'll go into that in a minute. But this is what I want to show you. Here's the S&P, and here's the S&P in relation to the daily 50 SMA. It's about 4.83. Usually that's about it, between 4 and 6. That does not mean it has to go down. It means it stutters while this catches up like it's doing. So you go and take the Russell. So we'll take, it's up 8. And heck yeah, that's pretty far away. That's a lot for the Russell. That's like 7%. So I just go back and look at other times. 7%. This one's going to be more, I think. Guess what? 7%. Every single one of these was 7%. Isn't that weird? That's why I can't chase the Russell on the long side. Just can't chase it on the long side. That's why you can't chase the bond market on the long side, because it's extended. Then you get into some other things like Home Depot. It's not going down, but this is extremely extended for this stock, 10% above its moving average. The problem is, and this is why I was scared to put them on the box charts, these things haven't turned yet. And to me, a turn means at least on some kind of metric to have it under the ATR trailing stop. That's barely. I have to see a real bear flag. Now, keep in mind, I've been posting on the Chart Patterns Mastery about this. So it's not Street Smart Edge. It's the thing that looks like Thinkorswim, by the way, just to let you know. But this is what I did today. We have to pick and choose our areas. So that's number one. Number two, when you talk about the bond market, yeah, I think it's going to start affecting if it's down 116. So in answer to your question, Sean, but it's also going to be this. So CNN Fear and Greed. This has not budged from greed. I only look at extremes, extreme fear, extreme greed. It's been greed now for a week. I mean, probably 2 weeks. The thing is, it uses 7 different indicators. So you have definitely extreme greed when it comes to put call with the moving average. But look at that. That's extreme greed. But this is the problem. Safe haven demand. The 20-day stock and bond returns. Yep, the bond market's gone up. Stock market's gone up. So it's neutral. If the stock market stay up today and the bonds are down 117, you'll get this to be greed. And you'll probably get this to extreme greed. So there's a time and a place where the bonds matter. Does it mean they're going to matter today? Well, I'll tell you, there's no way I'm buying anything when I see that. So it doesn't mean you have to short, but I'm not buying anything when I see that, just to let you know. So that's the way I look at it. The other thing I wanted to show you in here is what we did earlier. So what we did earlier was this. So you got to pick and choose. So does everybody see, I know I did a class on short selling right at the bottom, but does everybody see that bear flag? So I hope you see that bear flag. So what did we do in the Chart Patterns Mastery? Well, we shorted the IWM right here, right there. So that's where we shorted it. So did we short the top? No way. Did we short the direction? We sure did. Now, why did we cover right here? We covered 3/4. We covered 3/4 because it's at support. So just keep that in mind in there. When you look at an hourly, it still looks like, well, believe it or not, it's developing a rectangle. And the worst part is if it breaks here, everybody's going to say, oh, darn, I missed it, when it could go all the way to here. We covered 3/4. Am I pissed off I didn't stay in more? Well, when I'm on live, I usually get out a half of something just because I'm not here to help. So if I'm not in that room and I'm in the essentials, even though Chart Patterns Mastery is welcome to be in the essentials, I got out of 3/4. Now we're already short other things and that's fine. But I'm telling you, if you wait for those, if we don't do any other trades, so we have no positions on, and let's say even in an up market, all you want to do is find short ideas. So when it's going up, you just back away. I'm not saying that. We made money on the long side as well. But I'm just saying if you wanted to only play short ideas, you have to wait for those bear flags or consolidation or bear flags. So I'm just telling you that's how to do it. And as you see, bonds finally got to the NASDAQ. They should. So is that a bear flag? No. The only bear flag really was the Russell, and that's why we screwed around. On the other hand, on a 2-minute, sure. That looks like that. Now, let me just tell you on how I want to play later in the day. So, number one, if I do any errand and I'm gone, that means all hell is going to break loose. That's just the way it is. It happens every time. But this is what we're looking for. Not on Thursday. We're talking about Wednesday. We're looking for that. We're looking for that. We're looking for that. All the way down. That's a 2-minute. So you put a 5-minute on the right, or a 15 for that matter. As you see, there's a time and a place to screw around on the downside. Time and a place. How about on Wednesday? Sure enough. Did you miss the top? Yeah. Did you make the direction? You sure did. Does that look familiar? Just look at that right there. And then look at that right there. Yeah, that's why we're short. So that's why the NASDAQ's more affected by those kind of moves than the Russell, but the Russell is too far from everything. And that's exactly why I didn't want to show 8 million long ideas in the Chart Patterns Mastery, but I wasn't sure when the markets would turn to be able to play short ideas. The problem is that this developed during the day. It was real easy to say, oh, the market's extended, let's short the opening. If you shorted the opening, let's say this morning with the unemployment report, yeah, you would have lost 150 points. So that's why you have to wait. Now, maybe things clear up a little more by the end of the day. But for my money, I want to take what's at, you see it. So what I'm talking about is I want to see a 1 hour. As you see, there's a lot of support in this area. I want to see some kind of consolidation here. So then it can have enough energy to plow through this. What do I mean? I mean that you want to see this work off the 15-minute oversold by futzing around in this area. The hourly is not oversold. So, but if this doesn't hold right here, I think you're looking at all the way here. That's a big move. That's 30 points, 30 points. So like I said, if I go anywhere before the close, that kind of stuff is going to happen. It's just Murphy's Law. So like I said, that's the way at least I'm looking at that. And the first thing, and sorry about that in the YouTube room about seeing the screen. So sorry about that. So what am I watching in here? I'm watching how extended things are from their 50 moving average, but I really, really need to see some kind of rollover, even on a 9 EMA. And you're going to find that when you go through this, there are certain stocks that are already under the 9 EMA, and those are the ones that have been the best to short on rallies. So the other, and I can't stress this enough, if you see something, and I love using tells. So if I see Broadcom, so Broadcom open up. So if I see Broadcom with this kind of structure on a daily, where it's oversold, that's the arrow down here using the MACD at support, and it had earnings, and you're like, oh, it's going to go to the moon, and it fails miserably, then this kind of buy signal on the bottom is less likely to be trusted. So I'm using the most expensive stock I watch, and it's price action combined with the bonds today, but Broadcom is really helping. So if that's true, that means to me that the Microsoft is the next way to go. Heck, it's acting great today. But if this on Broadcom didn't work, and this is already under a lot of levels, then I'd rather pick on the ones that already are under levels. So that's what I'm going to try to do. You don't see it on here. I can show you a trading view again. So you see that Broadcom is under, now it's under the 9, but it was under the 9 here. What did that mean to me? That bearish patterns, ultra short term, are more likely to work, which is exactly what happened. I know it's hard on these AI stocks to even think of shorting, but if you see it on a daily chart under something, like right here, then those are more likely to work, which is exactly what happened. So now comes the tough part. The tough part is if the Microsofts got under things and the Broadcoms got under things, do you take the things like Home Depot that haven't gone under anything yet? That's the big problem, because everybody wants to short Home Depot because it's extended, but you don't have the same daily structure like under that. That's the 9. So let me take off some of this stuff for you. Just make it easy for you. There. It's not even under anything. Now, do I think that if the overall markets get nailed enough that this is going to go down? Yeah. But it just isn't there at the moment. So it's just not there at the moment. Just want to make that clear. And Larry, I'm sorry about that for not sharing it, but that's exactly why I encourage the chat to post things. So if I screw up, you can call me not call me out, but you can help me out, because I'm watching a ton of things. So I apologize. But getting back to it, the hardest thing to do is to take the stocks that are extended and jump the gun. I'll tell you, we did. So RCL. Yep, we jumped the gun. It's way too far from the moving average, but it's not under anything. Why not do the easy trade? And the reason I'm sounding adamant is not like I'm talking down to you. I'm talking down to me, because I didn't do it. So I took the strongest stock on the planet and we did spreads instead of taking the stocks that have already crossed under something. Just crossed under something. So that doesn't mean they're going to work, but the hardest thing is going to be that if this, which is just a bit extended, yeah, it's 15 points, 25 points over its moving average. And the worst part is when it finally breaks, or if it breaks ever, maybe it goes to 1,000,000, everybody's going to give up here, even though that's probably where you should be shorting it. So just want to show you that. Now, a lot of times I don't show scans in here in the free YouTube room, but it's such a simplistic scan, anybody can do it. Anybody can do it. And I'll show you what we're talking about. My main list is a bunch of the most active. That's it. Most active. And no more, no less. And all I'm doing is taking that off. And all I'm doing is I'm taking a 9 EMA. Like I said, anybody can do this. It's just under popular studies. And then all I'm doing is taking a close, let's say 0.05 under the 9. On an exponential. That's all I'm doing. It's like 31 stocks. The moral of the story, if I'm going to play things on the downside before everything else breaks, you got to take the stocks that are already breaking somewhat. That's all I'm doing. You can go on your Schwab, because I'm on Thinkorswim. Go to your Schwab platform, TradingView, any of them. But the ones that are under this are more likely to underperform, even though it doesn't make sense. You would think that RCL would underperform because it's so ridiculously overextended, but it hasn't. So, I mean, do I think it will later? Well, I sure hope so, saying we're short it. But we have spreads on. We're down money in it. We made on a lot of other things, and we'll keep grinding it out. But getting back to it, you see these. It's all at 31 stocks, just 31 stocks. That's it. Now, tonight, maybe it's a lot different, especially if the bonds stay down. You're much more likely that every stock's going to, well, Sean, not everyone, but you're going to start seeing bear flags. So let's just take those 31, and I want to show you what we're talking about. So I love teaching this kind of thing, especially after I did a short selling class right at the bottom. I warned everybody, though, there's a time and a place. You've seen it during the week. Good selling opportunities. So they're always there, and they go down faster than they go up, usually. So let me show you. So you got the 31. And I bet you, yeah, I watch a lot of Fargo. We're on the 5th season. But I bet you the ones that are under things are the ones more likely to go down. Now, see this? I warned everybody not to screw around. They were coming out with European approval of their diabetes thing today. It's already had a massive move. No CRISPR stocks. Somebody asked me about EDIT yesterday, and I said, no way I'm buying that. Even if it's a bull flag, when it's a, beam. When it's a bull flag against resistance, just can't do it. And I knew CRSP was coming out with news, so we didn't do it. But I'll tell you, this has been one of the healthcare leaders, one of the XBI leaders. If this goes down, it'll probably start hitting the Russell. The other thing, and Sean, I hope you're still in here. There's no reason this should be up this much with the bonds down. These regional banks, I want to look for shorts in these. You see the bear flag developing. These are regional banks. And how about cell towers? Well, I already missed it today. But there's something that got under their moving averages. Sorry if I'm scratching my nose. It's not like it's the 80s. We had a big flood and we're having things sanded and all that. So it starts messing with your lungs and all that. So sorry about that. But getting back to it, interest rate sensitive, totally more sensitive, Sean, than maybe the NASDAQ. But with a Broadcom going down, now I'm looking for bear flags, whether it's interest rate sensitive, especially with the bonds on their low, or these 31. So let's go over those 31 again. I think I screwed it up. Let's do it again. 31. Now, I think you're going to see that the ones that were under their 9 EMA are still getting blasted. Broadcom. Remember, that was already under it. Lamb is a pain in the rump. It got downgraded. Then it was 710 this morning, and I gave up and didn't short it. So, but all of these starting to be under their 9 EMA. Just keep that in mind. Under their 9 EMA. So if I go over here, now some of them, it's because they got nailed today. It's not going to let me do it. Let me add the 9 EMA. All I'm saying in here is bear flags at least have some of the momentum start to fall apart. So let's just go. I'm just going to put moving average exponential. Now, I know this seems simplistic. Don't laugh. I know everybody gets psyched out about, oh, they're algorithms and how do we fight against them? Well, I know a lot of hedge fund people, and some algorithms are one indicator. They might be the 9 EMA. In fact, I know there's algorithms that if a stock crosses above the 50, they buy it. Believe it or not, Merrill Lynch used to have a thing when it was Merrill of if a stock made a new yearly high, you buy it. That's how simplistic these are. But let's go, and I'm just going to take this 9 EMA. And like I said, it's a real pain when things are extended, but you're going to see the ones that already crossed are the ones that are more sensitive to a sell-off in the market. Now, these just started selling off. It's more than, believe it or not, the AI stocks. So they already went down and now short rallies till proven otherwise. It's amazing. It's just amazing. The ones that are under are the ones that have underperformed. Don't take AMT. That only started today because of the bond market. But a number of these chip stocks like AMAT, yep, they were already under it. It's much easier to do option spreads under the market if you're bearish on stocks that are already turning. So I just wanted to show you that. So I'm telling you, First Solar, I still like that idea. I don't know about liking it right here, but here's another perfect example. So when the markets were going straight up and this got under the 9 right in here, like I said, not here, not at Thanksgiving. I refuse to short at Thanksgiving. After Thanksgiving, it got under it, and guess what? Every rally was to be shorted. So definitely see your point. I don't know if I want to mess with it when it's that oversold. I'd rather pick on some other stuff. So, I mean, that's where I am. And also, don't get me wrong about at this time of year, you get some real funky things like CMPS. We were in this at 30. So there's a time and a place. A lot of people say, can you use a short selling class if you want to buy something? Darn right you can. You stop yourself there. So we bought in here. We never looked back. We never looked at it again until now. Yesterday, I posted in the Chart Patterns Mastery. I was looking to buy it and I didn't buy it. But if this, you get this sort of tax loss selling abating where people are selling the winners and selling the losers, and that goes away now. So, and keep in mind that scan, all it is crossing a 9 exponential. And that doesn't mean to short on that. That means on a daily, I'm looking for stocks that already are showing weakness while the ES is going straight up. So I'm just taking the stocks that are somewhat rolling over already. So that way, if the ES goes nuts, then, well, they've already rolled over. If the ES sells off, they'll probably be the first to go down. So, I mean, that's the theory in there, and it's been working. So just keep that in mind. So certain things, like I said, if you trade biotechs that have no earnings, a lot of times after a spike, they're going to do a secondary. So this is like I showed that and we didn't buy it. Just to let you know, I miss things all the time. I have no idea what to do with it now. So, but they had no money. They needed to do a secondary. So just keep that in mind. And the odds of testing the opening range, I'm just going on patterns. So that's all I'm doing. Now, can it go back to that range? All the way back there? Well, if I see this work off its oversold by just futzing in this area, all of a sudden it's going to form something like that. Now, it might take some time, but if it does, yeah, I think it could test the bottom. No doubt, especially if these stocks like Broadcom don't rally. As you see, they're rallying a teeny bit. Not a lot, but they're rallying a teeny bit. So, and by the way, Chart Patterns Mastery, if you're in here, that wasn't a bad exit in Tesla, was it? So, or a good, it was a good short in IWM. So far, so good on some of these. But I can't stress enough that the first thing to do on any of these, like RCL, what a pain in the rump. But it hasn't even gotten under the 9. Now, you might say, well, it's so far from here, it's going to get under the 9. Well, that's like a slasher movie. You know they're coming out, you just don't know when. I mean, I think obviously it's overdone, but it's not under anything. So just keep that in mind. It's just not under anything. Now, over here, you might say, well, it got under something, but it wasn't that extended. Just wasn't as extended as you're seeing now, but it hasn't sold off. So that's one of those things. You just have to go for the ones acting the worst. And that's how you have to do it. So, Kim, yeah, that was a good one. Also, IWM was a good one, Kim. I hope you did that one. Yeah, all we're doing in here, just to let you know, number one, Sean, the probability of a stock going crazy on the upside when the bonds are down 116 goes down dramatically. That's why we got out of Tesla. We just, not that it looks bad, it doesn't look bad at all. It's just that if you're playing something that expires today and the bonds are down that much, this is less likely to go crazy on the upside. That's why I got out. Did I like gulp because I was worried it would go to 250? Yeah. But I mean, it was just all probability. So Apple, and this is why I didn't do them on the Chart Patterns Mastery in the box charts. Do I think this is extended? Yeah. In fact, this is what I'm watching in Apple, just so everybody knows. Here's the ES on a daily chart. SPX. This is that rollover gap. So let's take SPX. I'm going to take off all the drawings. You see on how it's forming somewhat of like that. Sort of a diamond formation. Now, diamond formation is my least reliable chart. I just show it can be a consolidation, it can be a top, but I'm showing that only because I wanted to show Apple. Apple broke up from that diamond. Is Apple extended? Heck yeah, it's extended. But it hasn't rolled over yet. So, Sean, I totally see what you're talking about. In fact, let's go into that. I'm going to take off the 9. You see it hasn't gotten under the 9, while other things have. So let me just show you what I'm looking at. So Apple, you had this big old uptrend. Let's go see how far it gets over the 50 before it stutters. So there's 8. That's 8. I know that's hard to believe. That's 6. And where is it now? Well, the thing is, it was here and hardly went down. There's your 8. Oh, how about here? 7.7. So this 8, yeah, it stuttered for a while this caught up, but it's 8 again. So totally see why you'd want to do something under the market, but it hasn't gone down yet. That's always the pain in the rump. Hasn't gone down yet. So just want to show you that of what I'm watching. And like I said, that doesn't mean to do anything this second. Doesn't mean to do anything in here. Lara, I have a lot more like that I could say, but one pun a day is enough, I guess. But you'll see in here, guess what? So we see all this. Well, here you go again. I'm not going to post a trade for you, but I'll post an idea. We were just talking about the NASDAQ working off that 15-minute. Usually day trading wise, I use a 15, a 5, and a 2, or a 1. Go and check out a 2-minute chart. There you go. Another bear flag. The only difference this time is it's oversold. But you got that. How about the ES? There's a bear flag. How about the IWM? Yep, there's a bear flag. I like IWM better. The reason I like IWM better is it has an air hole all the way to here. It's not a great risk reward, but it's not bad. So I'm just showing you. You don't have to do anything I'm showing you. I just want to point out real time what I'm watching. That's all I'm doing is pointing out real time what I'm watching. So then, Sean, interest rate sensitive. Well, the interesting thing is it's only crossing now. Very interested in that. Just not doing it yet. So in there. This refuses to go lower. And this, why aren't I jumping on the bear flag? I'm not jumping on the bear flag this time because it's oversold on a 15. Doesn't mean it can't stay oversold. It could do this. When I see that type of pattern, it doesn't mean I want to buy when it's oversold, but I'm not sure about shorting yet. So that's the kind of stuff I'm watching. Sean, that's a bad thing to bring up. And I'll show you why, Sean. One of the worst trades I've ever done, ever, is CCI. I'll show you why. So in the essentials room, you were talking about that you regretted not holding it. See that? Yeah, that was me. Not there. Not there. Here. Right there. I bought it all the way down. I finally got out like $3. $3. Worst trade I've ever done. Right there. So just let you know that was bad. And let me just tell you, in hindsight, I think you see where you buy it and where you sell it. That's why if I do a short selling class, it'll keep you out of trouble on the upside. Look at that. So it was a better buy at 4 than it was at 2 because you didn't know if it was going to 0. So I'm just, these things, I'm not saying they're perfect, but at least they tell you when trends might change. So just want to show you that. So thanks, Sean, for bringing that up. No, all kidding aside. Yeah, there are certain things that it's amazing it went up. Well, let me just tell you, the reason I was in CCI was I saw the whole thing about cell towers and, phones and all that. But my initiation stunk. So I was defensive the whole time. So that's how I looked at like that. So now, getting back to it, sure looks like the Russell is this. So here's another thing. This is from that short selling class. Like I said, that doesn't mean to do anything right now. That's a lot of double negatives. But this is a head and shoulders consolidation. Everybody talks about head and shoulders tops. You can find 8 million Head and Shoulders tops and get yourself reamed. That's a Head and Shoulders consolidation. So if that doesn't hold, you're talking about that amount. That's 13 points. That gets you to here. That's why we're picking on the IWM today. I'm just looking at some things I have on. All right, want to show you something else. Well, you see the bear flag developing. There you go, right here, right in front of you. You can even put it on a 1 minute. There you go. So if I'm right, even if it's oversold, which gets you a little nervous, real nervous, I'm not playing. I'm glad I'm on live. So I'm not posting away 8 million trades. It's very dangerous. So on the one hand, it's oversold. On the one hand, it looks like that. So that's where money management comes in. So we got out of 3/4 of her short, but it looks like this. So we stayed in a quarter. So if it goes back to here, we feel like we're brilliant that we got out of 3/4. If it breaks down, we feel brilliant, we stayed in a quarter. But theoretically, it goes down by that amount. Where then I used to say it's the path of least support, sort of like water going to your basement, but been there, done that. There. Bear flag, we hit that one. We covered 3/4 and we're still short. Just keep that in mind. That could go all the way to here. So, in answer your question about opening range, sure. Definitely opening range. If this breaks, whether it's the NASDAQ, whether it's the RTY, I think you see what we're looking at. In fact, the most bearish thing would be if the 15-minute, if nothing happens for the next hour. That would be real bearish. So then I'm going to look to do something under the market end of day options. And I don't look at call credit spreads, especially when something's oversold, because the calls, number one, I never do NDX. It's just too thin. Number two, call credit spreads and QQQ are so cheap, they're a pain in the butt. So you could sell the 191 call, but if you don't want to just sell it, let's say you don't want to short it. You don't want to short this. If you sell that, and a lot of times that's the way to make money, but for margin reasons, you just go by the 396. Now, I know that looks like you're only trying to make 40 cents and you're risking $5, but that's the way to alleviate the margin problem. So, yeah, you could do something like that as long as you're doing it directional and have a stop. So, yeah, you could do that, but that's the way I do it. NDX, that's too crazy for me, and it's too wide. Now, theoretically, sure, you could go and do something like 16.1, but I'd rather mess with the QQQ. But I totally said, well, there goes your bear flag breaking. So, yeah, I mean, I see your point. But when I see a bear flag, I want to buy put premium. I don't like buying premium, but I will. Well, there's your bear flag. So, hope that helped you. There you go. So now, so I hope everybody saw that bear flag. So in the essentials, did everybody see those bear flags? And in good. And I hope in the YouTube room you saw that. So that, bonds didn't rally, bear flags, and they work. So where could they go? Well, the 15-minute is going to stay oversold. This on the top, I don't have the MACD in there. But you look at this, let's go to a 5-minute. In the 5-minute, that amount, that's about 30 points. So that would get you to this support right there, 15,980. Not that far away. How about QQQ? Well, there you go. I'm so glad I showed you this. It doesn't always happen, but there you go. So that projects that far. Measuring implication. That's about a point from there. That gets you to where it is. And that's a quick point. And that brings me to the next thing. All right, the 15 looked oversold, no doubt about it, on the futures. On the QQQ, let's go into it and see if it was oversold. Well, it doesn't matter. That was an ideal pattern. The problem is when it's oversold, it can stay oversold. It's all relative. It's been way more oversold. So it's the pattern that matters. So definitely the pattern. But like I said, when you're oversold, you better take that quick measuring objective. It was there. It was fast, though. But it was the quick measuring objective. I just can't stress that enough. And it got right to that support we just talked about. But it was fast. So I just want to let you know that. Now, if this on the left just futzes around here for the next hour or two, then I'll look for another short. But when this is oversold, you really should take your measuring objective and get out of there. And I'll tell you right now, I know the Russells acted great. But when I see the big leader, which was CRSP, getting toasted, believe it or not, now I'll look for a bear flag in the biotech index. So, which brings me to the next thing, a teaching factor. We were real bullish on the XBI. I didn't have the confidence, though, so we did it as a call fly for the end of the year. Well, it went up too much. When you see that defined a pattern, you have to do it as a call debit spread, a vertical call debit spread. You cannot do it. I was too right. You can't do it. Yeah, if you see a defined pattern that breaks out, you really should do it as a call debit spread. You can even do it way over the market. But to do it as a butterfly, one of the most frustrating things for a trader is to be right and lose money. You want to be wrong and make money. So that's what, I hope that helps. Sean, have a good weekend if I don't talk to you. And you see what I'm talking about with that 15-minute. It just won't sell. It's oversold. So there was no way I was going to jump on something unless it was ultra short term. You just can't do it when it's that oversold. So I didn't. Also, I'm always watching what the rest of the things are doing. When this was down 35, yep, that was already making a higher low. That was the thing that I think brought down the NASDAQ in the first place. So I'm not going near the NASDAQ. Not as long as these are holding up. So I didn't do anything. Like I said, I was showing that quick trade, but it better be quick when you're already oversold on a 15-minute chart. So definitely you want to have multiple time frames to watch. So essentials room, I can share this for you. Like I said, you're going to have to put it on Notepad, but all I'm doing in here is looking at overbought on an hourly at resistance. Hourly doing nothing, but the 15 got way too oversold at support. Like I said, if I share this, you're going to have to put it on a notepad. Now, Diane saying that you've made about 30%. Should you really be asking me? It sounds like you have it down. But I will tell you that, gets on. This is where money management comes in. Let's say you're long 1,000 shares from down here. So definitely it could get back to there. You can always sell 3/4 here and let a quarter run, or sell half. So, but yeah, that was an amazing call. Diane in the Chart Patterns Mastering, she's in the Essentials right now, called this and shared it with everybody way down here. Really fantastic call in there. Now, there is another idea, Diane. This is a takeover candidate. It's up a lot today, up 10%, 13%. Probably the options for January are pumped. Now, look at that. You were in options because these stupid options are so cheap. So, no, I just sell a partial of your position and let the rest run. And if it goes down, you feel like a genius. That's what I do, Diane. All I'm doing is seeing if there's anything else I want to do. To me, all this is doing, as long as the thing that made it sold off is still down, is I'm watching this. I'm watching that 15-minute over here. on the bottom left. Yeah, I put a lot of lines here. Sorry about that. There. And now I think you see the writing on the wall. If this oversold down here, if this goes back to the 0 line and this doesn't go to new highs and just futzes around here, yeah, I'm going to get really bearish. At the moment, it's a push, especially with Broadcom going up. All right, Diana, I'm looking at something else for you. So that was a great call on your part. No pun intended about calls. Darn. I thought maybe there's a way to go in and roll out of those, take your big profit, like $2.50, and roll into like the 20s. But that's pretty extreme. So you know, I don't know the answer at the moment. The only other thing I do is I try to do it as a diagonal, is go and sell like some of the December 17.5s against it. Sort of like a poor man's buy right. That's one way to do it. And just to let you know, in all these rooms, we try to walk through these. I encourage questions. So, and try to come up with creative ideas for you. And sure, I'll look at that. Sorry if I'm smirking. Similar charts have similar outcomes. You were asking about that EYPT or EPYT. I always get that messed up. But all of those patterns worked. And let me just tell you, if I had bought it here, I didn't, I would have been out of 3/4 before earnings. But that type of pattern is working. So I've actually been, usually when it starts with the $50 stocks, then it goes down to the 30 and then the 10, and then you get into the 2s. Yeah, there's another one that has a bull flag. So they start, and the 6s. Look at that. So even if markets go down, these type of things go up at the end of the year. So CLSK right now, it's just too late. So just too late. There are a number of them that have bull flags, though. And just keep that in mind that even some dogs still have bull flags. There. Bull. Now this we got out today. We bought it down here. I got out when the Russell looked bad. Every time I see bull, I cringe. Not because I don't like bowling. It's because when we couldn't afford haircuts when I was a kid, like when I was 12, we used to go for dollar haircuts, and my haircut looked like a bull with the bangs and all that. And people at school said, "Hail Caesar." Yeah, true story. So every time I see bull, I think of that. So sorry about that if I have a hang up about bull, but it still looks pretty good on a chart. So what would you do in bull when everything's extended? You can probably buy the 10s. I wish they traded more. But all you're doing is, if the stock implodes, you're only going to lose the premium. If the stock bull flag works, you'll make a good return on your money. But that's one way to do it. So KS, this is the way I'm doing it. I can't show too much, but I'll show you what I'm doing. So all I'm doing is you could take the stock you just mentioned. So you could take CLSK. Capital markets is rough. But all I'm doing in there is I'll go through a ton of stocks that have a high average volume, that are over their like 50 moving average. And I'll look at every single one and look for bull flags in this type of environment. Not all the time, but that's what I'll do. So I hope that helps, everybody. Thanks for being with me, and thanks for all the input, and have a great weekend.